Monday special Midcap Mania with Nigel D'Souza. Nigel, what's on your radar?
Well, Lata, today we are looking at a stock. It's known as National Peroxide. The company has been buzzing around. Remember, it comes from the house of the Wadia, so it comes in from the Wadia groups. If you just take a look at it, that's the name of the company. That, in fact, is the promoter holding at around 70% or thereabouts. It's a Wadia Group company. Traditionally, we used to see that the Wadia Group had around 45% stake in the company, and a Belgian-based company that's Solvay Chemicals had close to around 25% stake in the company. Now, earlier this year, the Wadia Group went ahead and they bought their entire stake from Solvay. So now, in fact, the Wadias own close to around 70% stake in the company itself. Now, I'll just give you a background. What does the company do? They make hydrogen peroxide. What is hydrogen peroxide used for? It's a non-polluting. It's used as an oxidizing agent as well as a bleaching agent. And in terms of the total capacity, it's roughly around 95,000 tons or thereabouts. The key uses as well should come up for you on the screen. So it's used for bleaching, it's used for effluent treatment, as well as sterilization. The major consumers, really, of hydrogen peroxide are, in fact, the textile space as well as the paper space. I understand that close to around 80–85% of the demand comes in from both these two sectors itself. Now, the domestic industry is roughly around 2.3 lakh tons. Out of that, as I told you earlier, National Peroxide, in fact, owns close to around 95,000. So just in terms of a pie chart should come up for you. Just to break it up, 41% of the demand comes in from National Peroxide. We have Gujarat Alkalis as well. That's roughly around 35%. The others constitute around 4%. And around 20% is imported. So I also understand there is some talk about some duty that could come in for this industry itself. And in fact, the notification is pending with the finance ministry, because we have imports that are coming in from Pakistan, from Thailand, as well as from Bangladesh. Now, the key inputs really of hydrogen peroxide is natural gas, because hydrogen gas is produced by steaming of natural gas. We have seen that natural gas prices have been falling, and natural gas availability as well has been improving, which is a positive. And that's perfectly displayed in their numbers. For the 9 months, you've seen a bit of a growth on the top line. The operating profit has jumped up by more than 100% approximately. The margins have expanded to around 29%. Let's get the next plate up for you. And in fact, the profit number as well has come in at around 32 crores. That compares with just around 11 crores. So that's more than 190% increase on a year-on-year basis. These are the 9-month numbers that we're talking about, because some part of the finance cost as well has come in lower. So it's a virtually debt-free company. And the ROE and the ROCs as well, fairly impressive at around 18 to around 25% or thereabouts. What are the risks, though? They're selling just one product, hydrogen chloride. So that's something that, in fact, could hurt them going ahead. And if you just take a look at it, in fact, what if natural gases move up? That will not be a very good sign. Imports from the neighboring countries as well could hurt them. And I understand there are few of these domestic players that are expanding capacity, so oversupply could hit them. Remember, the total market capitalization is roughly around 700 crore, and they have investments in Bombay, Burma, as well as Bombay Dyeing, close to around 120 crores. Lata, well, we're always worried, what about whether or not these industries are polluting? Well, from their website itself, I picked up this line. They're saying that they process without the production of any harmful or environmental unsafe products. So keep this one on your radar. I think the numbers come in later this week. Interesting stock.